Hey guys, I'd like to welcome you all to Startup Grind Ottawa. Thanks so much for coming out on a rainy night. It's going to be a little bit different tonight than our usual setup. It's going to be a little bit more casual, a little bit more relaxed. But I'd like to introduce Mr. Dan Beer from IBM. He's the Director of Mergers and Acquisitions. Actually,
formerly,
he's going to tell you about that. But yeah, let's jump right in and get started. All right, so Dan, how about you just start us off with maybe let me know if I'm not loud enough or too loud or whatever. But how about you start us off with where you're from and what that kind of experience led you to do with IBM in Ottawa.
Wow, that's a long question. Yeah, so I'm not an Ottawa native, but I'd probably say that I am now. Been here for probably 25 odd years. Grew up in a small northern Ontario town. Some might know it, some might not. Likely not. It's near Manitoulin Island, up in the north, past Sudbury. Played a lot of competitive hockey, major, junior hockey, that kind of stuff, and that kind of brought me here. And so landed here and away from the paper town. It was a small paper mill town that I grew up in.
Elliot Blake.
Yeah, hey, deadly competitor in hockey.
And so, what was your family like? Were your parents entrepreneurial? Did you start kind of your own business at a young age, or
no,
what led you to that?
You know what? Exact opposite. I think that's probably what got me more into business. And my father was, as you'd expect up north, there's a lot of mining, paper mills, those kinds of things. My dad was in Inco, which is a big mining company now. I always say Vale, however you pronounce them now. I think he always did well for himself. But it was always clear to me that, any of the folks that were making significant money were typically not in that particular setting. It was the entrepreneurs that worked hard, the people that started their own business, the people that, in many ways forged their own destiny. Essentially, it was really a path, I think, that was the antithesis of what my dad did. And not to discount, of course, what he did. He was a very successful man at what he did. But, I always thought to myself when I was growing up that I wanted to do something that was a little bit different than where he landed. Mm-hmm. So that, I think, charted a little bit of the path.
Awesome. And so, you came to Ottawa. You graduated from Ottawa U, actually. So.
Yes, from here. This building didn't exist, though. Dating myself, but yeah.
So you took civil engineering.
I did.
So did you have a passion for entrepreneurship during school, or was it right after school, or how did you kind of veer into?
Well, I think it was kind of the similar thing. I started in civil engineering and found that I was down a path that was pretty similar to where my dad went. Right. Civil engineering is very hierarchical. It's a great profession, but it's really like the law firms where there's partners and there's people that aren't partners, and the wealth trickles up to those that are partners, and that in itself is a form of entrepreneurship at the top. But it became clear to me at the point I was going through, it was really in that era where the tech the tech community was starting to blossom in Ottawa. It would have been in the early to mid 90s when a lot of other businesses were doing poor. Ontario economy was in really bad shape. Bob Ray was the premier, for those that remember. And there was forced days off, and there was lack of investment in infrastructure, and civil engineering wasn't really going to go that far at that moment in time. And so when I looked around at where was the best place to land and where were the opportunities for entrepreneurship and making money, tech was a natural fit at that time. And so that's what made me make the leap.
Okay, and so right out of school, we spoke about the other day, you went to work for Corel for a little bit, the old software.
Yeah, well, it wasn't right out of school. I did a little bit of civil engineering, and I felt it out, but it was in a very small company, and did software development as part of that engagement, and realized, like I say, that it wasn't really going to be the fit. It's not the place you can create your own business. It's not the place you can create a lot of personal wealth unless you pretty much put in time, was what I walked away with. Again, honorable profession, and I liked it, but it wasn't really a fit. And so I did end up going to Corel, and it was an interesting place to start because I started in the customer support area of Corel. I applied at that point. I was doing software development in the engineering firm, but of course to go to a software company to do software development, they didn't look at it as par for par. And I started in technical support, customer support, and in many ways it was a good place to start because it really gave me that view of not just technology, but of putting the customer first, and what are you seeing when that stuff hits the market, And are you filling a need, and how well are you filling a need, and really being able to marry technology to the fact that, you know what, there's actually someone that really uses this stuff. You're not designing it in a bubble, it's not just a nice idea, but at the end of the day, if someone's not getting benefit of it and you're not selling it, then, you know, what are you doing? Mm-hmm. And so it was nice to see the use of the software before I ended up going into more development. It was my stepping stone into development, QA, those types of roles, before I left Corel.
Cool, very cool. And so you left Corel to join a startup, specifically
I did,
Omnimark?
Yeah, it was a very, very small company when I joined. I think I was around employee number 20. Might have been less, might have been a little more. I can't recall. It was in the mid-90s. Okay. And they were looking to grow fairly quickly, and they had an interesting technology that was a fourth-generation programming language. And so it was all around the parsing of SGML, XML, for anyone who knows that space, and creating content in multiple formats from a single instance. Mm-hmm. So big customers too. They had the Wall Street Journal, they had Larousse Dictionary in France, they had Boeing for all the FCOM flight manuals, assembly and so forth. But a very, very small company, not that many people, and it was an interesting. I started in development. That's okay. Where I landed.
So that was going to be my next question. Was I believe there you kind of had multiple roles, or you kind of had a bit of a transition?
As many people I know, this is a startup grind, so I'm sure there's a lot of people in here doing what we did there. When you have a company that size, you pretty much get involved with whatever it is that you need to do. And so I was in development, and I suppose I had a gift for gab. And so before long, they threw me in front of the customers and said, geez, you know the technology, you're technical, go and talk to somebody because we need someone to talk technical to a customer and have them understand. And so before long, it didn't take long, I ended up more, I would probably say, in a services bent, and leading more of a consulting services and growing that practice for them because it was in its infancy when I joined. And so I landed there for the majority of my time afterwards. Product management development, then off to consulting services.
Okay, and so you guys took the company from around $1 million, I think you said, up to 20 million with, and then you guys were acquired.
Yeah, well, there's probably a leveling off in there. I think that we ended up, which is an interesting, again, from a startup perspective, it's an interesting lesson. We built the management team into a pretty tight team, and we got really good growth. Mm-hmm. But I would say at the very, very end, what happened is we essentially had, in some ways, a disagreement in direction on where the company was going to go and how we were going to go to market and what was going to sell and things like that. And many of us decided that we couldn't reconcile that, and we tried other opportunities. And I think there was a little bit of a lull in an acquisition, and so that's where they ended up now. They're part of Stilo.
Awesome. So you bring up a really good point there that I wanted to highlight a little bit later on, but we'll kind of jump and do a bit of a bridge thing here. So you said that internally you guys had different ideas, and so now about where the company should be heading. And so now with your experience 6 years as merger and acquisitions at IBM, how important do you think it is for a founding team, or at least the founder, to have a clear idea before they get started as to where they want their company to go? Is that at all critical? Should it play a role? What are your thoughts on that?
Well, I don't necessarily know that anyone knows exactly where the company is going to go. I think it's worth thinking about, right? What are you doing this for? I'm not necessarily sure it's the same question as knowing where the company is going to go, but what is driving you, right? What are you doing this for? Are you doing it for money? Are you doing it for power? Are you doing it for fame? Are you doing it just because you love it? Are you trying to save the planet? What is it that drives you, right, and motivates you to do what you do? I mean, ultimately, we all have to pay the bills, and I do think that there is some thought that should be given to an exit strategy in a company, if that's what you choose. I mean, again, very smart people in this room, when you're in a company, you're either going to build it because you want to make it a successful standalone business that you can milk profits from and be a sole proprietor, owner for the rest of your life and make a very healthy living, and that's a good place to be. Or you're growing it for acquisition, or you're growing it to IPO. But usually you're doing it for a reason. At some point, I think it dawns on you, what am I doing this for, right? Yeah. But I do think that the first step is not that, right? I think the first step is more along the lines of what drives you, right? What are you building this for?
Mm-hmm. And how important is it for entrepreneurs to seek mentors, to seek outside advice? Is it ever too early to kind of set up an advisory board?
Yeah.
What are your thoughts on some of that?
I think it's absolutely essential and critical immediately. I think that there's, especially in Ottawa, frankly. I mean, I think that there's a lot of untapped talent in Ottawa that has a lot of experience in photonics, in life sciences, in software, that in many ways goes untapped. And you know, a lot of times I encounter entrepreneurs and they have a great idea and they have a really strong product, but maybe they haven't grown a company from $1 million to $50 million, or $50 million to 100, or 100 to $1 billion. And in many ways, they may not know what they don't know. And you know, the fear to ask, or the fear to surround yourself by talent, or the fear to give up your baby, which you don't have to do that, I think in some ways can limit someone if they're not really leveraging the strengths of the people around them. I think it's essential.
Awesome, excellent point. Okay, so now coming back, so after Omnimark was acquired, you went to work for Cognos for a little bit. How was that? How was that transition from, you know, startup where you're in a very small team to going to a, you know, what was at the time a really big company, you know?
Well, it was interesting. Well, I look back on it now, right? It's interesting to look back and have that hindsight. But when I moved from Omnimark, there was a very small company, 20-ish million. Cognos at the time, I think, was around 300 million, okay, which seemed like a big company at the time for me, right? And it was a stark contrast. And I only did stay 2 years because of that. It's the reason I left is because as you go, and again, many backgrounds I'm sure in here, but from a small company where it's nimble and there's just you and 2 other people, or 5 or 10, you know, you're very nimble and you can make decisions quickly, you can execute quickly, there's few people to consult, and in many ways too, especially if you're a startup, you don't have a lot to lose, right? You don't have a base of customers that are following along behind you that you always think, oh, what if I alienate them? Which as you get bigger and more established, you have to start thinking, what am I doing for the customers I already have, right? And it's not just about customer acquisition. And so, for all the right reasons, it makes a bigger company a little bit more cautious, is probably the right word, in how they act. And so I did that for a couple of years, and it was a great learning experience to understand how a bigger company worked and what the differences were. And I would probably say it was my first true big company experience at the time. But I got the itch to go back to something that was a little bit smaller and do something a little bit on my own and try to do something more entrepreneurial again.
And so what was that? That was Insurance Engine, which does...
Yeah, it was founded over a beer, like all good ideas are, I guess, a beer and a napkin. And I have a good friend, Kevin Reed, who I played hockey with, has done quite well for himself, and another friend out of Boston, and his name is Brent Bannerman, and we were just out one night, and Brent was from the insurance industry, a VP of insurance at Zurich, and Kevin was just a serial entrepreneur, and never saw an idea he didn't like, and you know, very much a deal maker, which was an interesting role for him. He didn't really ever have the idea, he didn't really ever have the operational desire, but he could put all the right pieces together to make something successful. He was very, very good at that, network and so forth and so on. And so Kevin linked us all together, and we had the concept for Insurance Engine, and bing bang, off we went.
And so what exactly did it do though?
So the concept was that at the time, and still today, group insurance, especially in the United States, the HMO coverage of the health insurance and all other group insurance in the States, all the big companies, Johnson & Johnson, Boeing, all those, would go and procure on a regular basis group insurance for their company. They have thousands of employees, hundreds of thousands in some cases. And they would do this through a very, very manual process. They would do RFPs, and they'd submit the RFPs to providers, and there's a bunch of tiers, brokers and providers. I probably can't even remember the hierarchy nowadays. But it was lengthy, it was tedious, it was hard to compare RFPs that were coming back in. Prices were being given for different things that didn't align. You know, you'd have to get a price of $5 from this company and $10 from that, but then you have to dig through a mountain of RFP to say, well, they have a deductible of this, they have something different, and you know, insurance, the buying of this type of group insurance was really cumbersome.
Yeah. So you guys were being transparent and disruptive, I guess.
We put it all online, and we said we're going to have standard RFPs. The company can create same questions. People fill it in online, so we can put analytics behind the data and say we can compare 1-to-1, and then we reversed auctioned the price and said everybody, we're actually going to run a bid, and all the providers could come in and bid on Johnson & Johnson or Boeing or anybody else that was offering their health benefits for sale, basically, and drive to a standardized RFP and a standardized auction process to drive the price down.
Cool. And so there's something pretty interesting that you mentioned in there. I mean, you come from a technical background. You mentioned the other guy was a little bit more of a deal maker, a networker, and then I'm not sure what your third co-founder's background was. Insurance, sorry, exactly.
Subject matter expert.
Subject matter expert. So I was just about to ask you, and you know, I imagine that when you guys go through, you know, when you're acquiring a company, you guys do your due diligence. What do you look for in a team, you know, specifically? Or what would you recommend as an ideal team, even?
Well, you know, one of the big things is chemistry. You know, I think it's rounding, variety of skill sets. I think when I look at a team of folks who acquire, the ones that have been most successful are those that are not They have a little bit of friction. They're not necessarily best friends, and they're all agreeing and nodding and having a lot of groupthink. They're in a position where they've maybe come from different backgrounds and they're thinking about different things and they're challenging each other. It's always beneficial to have that, but that they also have a chemistry. So, not friction to the point of dysfunction. There's a big difference, right? And you do see that. And it's common. I've seen many diligences I've conducted where you're in with the management team and you have 5 or 6 people in front of you, the CEO and his lieutenants in front of them, and they're disagreeing in open forum, and you're asking a question, no, you're wrong, and no, didn't work like that, and you kind of scratch your head and going, okay, well, nobody agrees here, and you're supposed to be a management team, right? And this is in a diligence where you're supposed to put your best foot forward, so you can imagine what the meetings are like when you get out of the diligence.
Exactly. And so you guys ended up selling Insurance Engine, or it was acquired to Highroads?
Yeah, maybe acquired is probably a strong
word.
It was, we raised, I think it was around $35 million in funding, and we grew the place pretty fast and made a lot of investments. And we were about revenue neutral, just close. But we needed a little bit more because we weren't at that point where we could say we could get the profitability and be operating at a place where we didn't need anybody else to chip in. And we hit the time in the market just at when the crash was coming, when the bubble burst and stuff, and money was starting to get very not liquid. And so we had some decisions to make, right? What do we do with this? And so a lot of the investment offers that were coming up were not very rich. They were, I want 75% of your company, or I want this or that, and so it made sense to have someone come in that if they wanted the place to more take the place.
So you guys, and so instead of raising money, you essentially raised and sold at the same time.
Yeah, most investors, as people in this room probably know, when they come in, they want board seats, they want maybe parachute management, they want, if I'm going to give you whatever the amount of money, $1 million, $50 million, $20 million, well, here's my terms, right? And so we took those terms.
And how flexible are those terms? So, like, I imagine that you guys, as IBM, when you were doing those mergers and acquisitions, what's the negotiation process like for startups? I mean, I think that a lot of people here in the room, maybe some of them are thinking about eventually being acquired or building something that could be acquired. But as I said the other day, it's kind of this fuzzy thing that we know is at the end of the road, but nobody's really sure, like, what, exactly. So, how much flexibility is there in negotiating? Should you try to negotiate? That kind of.
Well, there's a lot of variation. It's a tough one to answer because or maybe it's easy to answer. I think it depends on the market position you're in.
Okay.
Right? If you're in a position where you've got a strong customer base, you've got a proven product, you fill a very specific need where you can show a market demand, and the addressable market is of decent size, then you're in pretty good shape, right? You never want to be in a position where you have to sell. And if you're in a position where you have to sell, then can you negotiate? No, really, right? Because any company coming in to acquire you, they get access to your books, and they get access to your market, they get access to your pipeline, they get, we as an example in IBM, there's probably, it is more common than not that when I would go in and do a diligence that I would actually be educating the company on what they do or don't know, even on stuff they think they know, where, they find all sorts of holes they weren't even aware of. And even if we don't consummate the marriage, they actually walk away with a lot of benefit. And a lot of companies have found holes in IP, they've found holes in financial structure, they've had holes in transfer pricing. And they walk away and go, geez, we thought we had it all figured out. And you just don't want to be in a position where you have to do it.
What's the best way to mitigate those for startups, for companies, for other people here? How do you mitigate that knowledge gap? What's the is it advisors? What's the best way?
Yeah, I think it's all of that, but a lot of it's pretty simple, right? I think if you think about just basic business and why we at IBM acquire, for instance, right? You have to have a customer demand. A cool idea is just a cool idea. A lot of people get a cool idea and they go out and they go, geez, I'm going to build the next best widget. Well, okay, but if there's not a demand in the market, or if you're, especially if you're a startup, unlike perhaps an IBM, we're a very big company at IBM. There's some companies that have significant enough size and money and spend that you can actually go and create your own market. You can say, I'm going to go and make a new market category that never existed, and I'm going to get everybody talking about it. You're going to have a hard time doing that if you're a startup, right? It takes a lot of money and a lot of patience and a lot of tenacity. And so I think it's about addressable market, and you have to stop and really, really be honest with yourself and say, am I building something that has an addressable market, that has a demand, that has a need? And it's not just cool, right? And if it doesn't have a market need, then I think right away you're in trouble. You have to be able to define that market size and that market need. And so I think if you have a market need, and then you develop the technology for that, and then you surround yourself with people that can give you advice on the landmines to avoid, then I think you're in good shape. You're more inclined to have a startup that's going to grow into something that is either going to be profitable on its own, or when someone comes to acquire, you're not going to be in a position where you're hostage, that you have to.
Very cool. That's good. That's a good point. And so moving on from there, you guys exited. What did you do after that?
So I went to another interesting company. It was a startup, but not, which sounds funny, I guess. It was a company called WebGain. I'm not sure if anybody in the audience knows of WebGain, but it was a startup because it formed almost overnight.
Yeah.
But it was in many ways not a startup, and it suffered from different afflictions. It was a coalition of companies you've never heard of, like HP and Sun, and who else?
IBM.
BA. I think IBM was involved. There was one Oracle. There was 5, and they were all getting into the Java space at the time, and J2EE, and Sun was promoting Java, of course, and Microsoft was coming up with .NET, and there was a lot of competition in the market, and they were all fighting for standards and so forth, and they were all trying to have their own tools, if you will, on how are we going to go after this open source Java space. And they kind of realized they were stumbling over themselves, and Microsoft was coming up the middle and eating lunch. And so they decided to put a bunch of money in a bucket and say, we're going to put all of our Java development tools into one company, and we're all going to put money in that company, and we're going to start it overnight, and bang, there's WebGain. And so I think they funded it, again, you'd have to fact check my math, but it was a lot. It was like $100 million or more, and I went, bang, go start a company. And so the company started off pretty rich right away.
The best startup.
Well, you'd think so, wouldn't you? But it's funny that you say that, because it was one of those examples where you think about a startup, you think about growing a company, you think about all the ingredients you need to be successful. How can you not be successful? You got $100 million in the bank. The CEO of the company was the former CEO of a division of BEA. The director or VP of marketing came from Sony. He was a marketing genius. The CFO came from HP. So, as a leadership team, I was doing services. So there was a very, very strong leadership team. You're thinking, how can you fail, right? Well, funny enough, these guys didn't really know how to run a startup. They came from these bigger companies without any type of entrepreneurship background, and frankly, peeled through money like it was,
There's no lean startup methodology.
There was no lean startup methodology, right? And so I think it's that skill set of, again, there's a right formula, if you will, for a different company size. You can do things when you're one person that you're not going to do when you're 450,000 people, and there's things that you're going to do in the middle, right? And I think that's in many ways the success. The formula for growth is knowing the things you can get away with and pacing yourself through those different milestones, right? And I think a lot of times companies, they hit those inflection points and they don't necessarily know how to get through them. And I think this, in WebGain in many ways, was a reverse inflection point. It was people coming from multi-billion-dollar companies and coming down to a $100, $200, $300 million company and going, wow, it doesn't operate the same. I don't have the same levers. I don't have the same cash in the bank. Because when you grow and you spend to just get infrastructure, and you don't necessarily have the revenue stream coming in yet like you would from a historical company. This is a startup, right? Even though you got money in the bank, doesn't mean you've got revenue streams, and you've got all your customers lined up, and you've got brand loyalty and all the stuff you might have with an HP, a Sun, an Oracle, right? And so I think that they didn't quite adjust. And so again, got in a position where tough times. Needed more money, was burning cash too fast, talking about what's next, more rounds, kind of the Suns and the HPs, and eventually put it on the block. Said we need to sell.
And so it was actually acquired by Oracle, one of the companies that had tossed the money in that pot you were talking about.
Yep. So Oracle came in and they actually divided the company in half. They said we want this piece, and they spun out the other piece. And I don't actually know how the other piece ever fared out. I've not tracked it. I can't remember what they called it. The product, and some people might know it, the product that was in that piece is Visual Cafe. I don't know if anyone knows Visual Cafe. It's a development product, Java, C, C++. It was an
Probably
editor.
didn't fare well if nobody's ever.
No, I guess not. I guess it's dead. I don't know. But it was a Java development platform, and it went out with one part of the company, and Oracle kept the other piece, and continues to sell it to this day.
Cool. And so what was the path from there to IBM for you?
Well, it was a similar story. It's always funny. I used to always joke with friends and colleagues that, I think I was always destined to work at a big company. I don't know what it is, because every time I left and went to a smaller company, something would happen to move me on. So, I started Insurance Engine, and we had some factors that made me move to WebGain. It was a little bit of a bigger company, but I was still considering it relatively small because it was young and new, and even though it had good investment, it wasn't a big behemoth and established. And within a few years, that gets acquired by Oracle, and I was thinking, well, I worked for Oracle for a little bit, but wow, Oracle's now $50 billion software company, and I don't know if that's the size of company I want to work in. I want to be a little bit more entrepreneurial, start something small. So I went to the relatively smaller company back to Cognos, who at the time was, I think, 500 million, which is certainly different than the 500 billion Oracle,
Yeah.
right? But certainly not a startup. And then Cognos, of course, in 2008 got bought by IBM. So back to a big company.
Back to a big company. And did you start off in mergers and acquisitions right away, or what was how did you end up there?
It was an interesting ride. When I was in Cognos, I was running the worldwide channel at the time, business partners and alliances. Did a number of things in Cognos, ran support for a while, and previously I was in development, and then I had worldwide channels at the time during the acquisition. And it was the biggest acquisition IBM ever did. I think it was 6 billion, 5 point something billion, something like that IBM spent on Cognos. And as we were going through the process, there was IBM has a really, really strong M&A practice. They have always had that. But they've never digested a company that was $6 billion in size and 4,800 people. So it was new for them too. They didn't really know, how are we going to do this? It's one thing to eat a company that's 20 million in revenue or 100 million in revenue, but now you've got 1.x billion, you've got 4,000 employees around the world. What do you do, right? And so they formed a team to essentially be the steering committee for the acquisition success. And I was a member of that team, and we forged new best practices, and we forged new ways of integrating and new ways of doing M&A, if you will, within IBM. As the evolution of the process went on, the leader of that team left, and they asked me, "Are you interested in leading M&A now?" And I said, "Okay." So I left the channel piece and went there.
Wicked. And so 6 years later.
6 years later.
What was the biggest lesson that you took out of doing mergers and acquisitions? What's the one thing that kind of stands out as this should be done all the time, or this is what to look for, or what?
Boy, I don't know. There's one thing.
There's a bunch of things.
There's a bunch of things. I mean, I think it's hard when you're a small company, but I think that the lesson, I guess I would say, is companies learned when we do diligence on them, is that you're never too small to start thinking big, right? It's easy to get caught in a small company mentality and say, I don't need to do things properly, or I don't need to think things through, or I don't need advice, or I don't. So let me give you an example of some simple things, right? Mm-hmm. You're an entrepreneur like all of you in this room, and you're starting a company, and you're hiring people, right? And you have no clear lineage of your intellectual property, right? You have no employment agreements. It takes you 10 seconds to go out and have a lawyer give you an employment agreement. Really, there's stock, right? And in those employment agreements, 90% of the time, it'll say that anything you make when you work for me, I own. Not you, I own it. Because it's my company and you're making it for me, right? You'd be surprised at how many times we go and buy a company and they say, yes, we own this product and this is what you're buying. And we do the lineage trace of the IP, and we can't determine who owns it, right? Bob in Philadelphia made a piece and he's gone. He claims he owns it. He's actually developing on it, right? He took up the code with him, and he's making it. And then there's Frank over in Germany. He said he made a piece, right? And so you asked him, well, prove us some lineage that you, the company, own this IP, right? Well, sorry, we can't do that. I'm just telling you I own it, right? Well, you're not going to spend $500 million on a company if you think that in short order you're going to get a court challenge that you're patent breaking and you don't own it and it's not yours and so forth and so on. And this can happen in very small companies. Even something as small as the name. They brand a product and they call it XYZ and they spin it in the market, and there's no clear steps been taken to say that I actually own that name or I can legally use it, which again is a small thing to do. It doesn't cost a lot of money. But, we have had diligences where we would have to actually go and buy a product and change the entire name of the whole product, which has market awareness, because they don't actually legally own the name, right? Which again causes a problem. It's more money, it's more challenge, and so all these things you're going to stop and look at and go, really? Do I want to spend $20 million, $50 million buying this company and then spend another $10 million fixing all the problems that or created, right? So I got to go through lawyers to get the IP lineage and get all agreements signed. And so there's simple things like that. I think like IP is big, because most times, especially in tech, I don't know the variety we have here, but of course I come from a tech background. If you can't prove IP lineage, it's huge. I think the other thing is how you develop, and things like it all comes to IP lineage, but are you using open source? Are you using third party? How are you using it? Do you have the rights to use it, the licenses to use it? Again, these are quick checks you can check to say, if I'm pulling code in from all over the place, all of a sudden I built a cool product, do you really own it? You know, every open source agreement, every third party software has its own license that says what you can do with it, right? And if you're embedding that and it's a major part of your product, but it says it's not for commercial use, again, got a problem, right? And so I would probably say in this community, startup where you are and you're building, IP lineage is probably one of the biggest things that kills deals, where you can't prove that you actually own it.
I forgot to mention, we usually hold questions till the end, the last half hour. No, but you've been holding your hand up forever, so you gotta do it now. It's just go for it.
Yeah, I was curious if you have any recommendations on how to create like the IP lineage. Like one thing I've heard like this last week is create like an inventor's book, and you write down everything you do, document whoever you spoke with, stuff like that. Do you have any other suggestions? Or?
You're on the right track. It's all documentation. You have to clearly be able to show where it came from, and you have to sign contracts with all your employees that work on it that say that their inventions are your inventions. Invention agreements are a big part of it. So anybody that's coming in to touch your IP, you need to know that you've got something in place with them that clearly spells out what their contribution is. You know, that's one of the easiest ways to do it, because most of the times when you're in an IP challenge, it's usually because one, you've taken it from somewhere else in the market, like open source or general public licensing, where there's a dispute that says you don't really have, it's not yours and you don't have license to use it, or there's some other people in your company or around you that have touched the code and walked off with it and will claim, no, it's mine. It's not really yours, right? But if there's clear paperwork where they've signed invention agreements that say, I'm working for you and everything I create is the property and ownership of your company, then there's no dispute. Ends fast, right? So just plain documentation. Inventor's log is part of it, because in that stage, if it's just you writing down all your ideas and when you thought of them and the dates and how they're crafting and what you've done to advance them, but then once you actually get to a real company size where you're hiring people, it's important just to document their contribution.
Okay. Great, thank you very much.
Awesome. And so you did that for 6 years. The other day when we were talking, you said you guys were doing about 14 deals a year.
Yeah.
So that's a lot of deal. I think how many millions?
We were,
roughly?
give or take, in any given year, we probably in software solutions spent about $5 billion on acquisitions. We did anywhere, 14 would probably be the max. Some years we did 9 deals, some years we did some more, up to 14 some years. And yeah, it was a very frenetic pace.
And what's the process like? Like, how did you guys go about identifying companies? Maybe explain a little bit how IBM is structured and
Sure.
and that kind of stuff. Just
Yeah, well, IBM again. When I joined and I took over the M&A piece, it was already industry leading in my view on how it does acquisition, and it's very focused. It's very meticulous. However, it does have adaptability and flexibility, which work, because every acquisition is different. But it really started with those things we're talking about up front. It's a fundamental conversation around where is a market? Does a market exist? You know, what is it? How big is it? Is it something that there's a player in today? Do we want to be in that market? It always starts with us with a business conversation. Not what's, again, not to overplay that, but not what is the cool new thing or the cool new widget, right? It's is there a market or not? And once we determine there's a market, of course, the next is who's the best in that market, and can we build it ourselves and beat them? Always have the buy-build conversation, right? So if I'm going to go and spend $20 million, $50 million, $100 million buying a company, what could I achieve if I put $100 million into a bank and hired a bunch of people and said, you go and build this? Would I be further ahead, right? Sometimes the answer is yes. Many times it's not, because of the fact that if you get a startup or any other company out there, they're already in the market, they have customers, they have revenue, they have proven track. Of course, to build something, as you guys all know, you're entrepreneurs, IBM's no different. If I was going to come into a new market, untested, even though it's addressable, did I build the product right? Is the UI right? Is the features right? Are the functions right? Those are all questions that are not answered when you're building, right? Whereas if I can look across the room to an established company of any size, and they've done that homework and it's credible and they have customers and they've proven it in market, that's compelling because you've already got a story that you've flushed out, right? And so we'd always go through a funnel of buy, build, and market demand, and again, it always had to fit a strategy, though. You know, IBM is not the kind of company that buys to do, you know, competitor takeout. You see that in the market. You know, just buy for the customer base, and we're going to kill their product.
I was getting there next.
Yeah, we don't do that. There's a lot of companies that do. A lot of companies will buy for the subscription base, like the ongoing maintenance revenue that comes with software, and they'll just nurse that, and again, eventually kill the product and try and do some glue with what they already own, so it's competitive technology. But IBM clearly buys in the sock shoe category, right? Adjacencies, things that are complementary. You know, you're building shoes and I sell socks. Why wouldn't we put these things together, right? And so if there's a market space we think is adjacent and we want to go after it, then we look at the buy, build, and then we go from there.
Cool. And do you have any thoughts on that other model? Like you were just saying, like you just buy for consumer base. For example, Facebook is kind of in the news. They mostly buy for user base. Do you have any thoughts on that, or how can a smaller startup, like, should you be building to sell, you know, or should you just be building a very specific product for a very specific goal, and if you don't meet it, then you're going to end up going IPO? What are your thoughts on that?
Well, I don't necessarily know that there's a pro or con. There are different business models, and different businesses are going to pick what's working for them. There's a lot of companies that are very successful doing the just buy for the takeout play and nurse the revenue, and they make a lot of money doing it, right? So I guess in some ways you can't say it's a bad way of doing business. But I don't necessarily know that if your goal is truly to be acquired, right? I think that you would want to look at things a little differently, and a lot of people don't start that way. You don't sit out and go, okay, I just want to build a company to get acquired. If you do, right, if that's what your goal is, then I think the easiest way is to look for those addressable markets that are adjacent to technology that are big out there today, right? So it would be to sit back and say, okay, what does Microsoft do? What does Oracle do? What does IBM do? Who would buy me, right? There's only so many companies in the world that have enough money to buy you. And you'd have to say, what do they do today? What markets are they in, and what markets are they not in, or which ones are adjacent to them? Is an addressable market, and then you build the best thing you can to satisfy those customers, and I can guarantee you'll get noticed. Right? That's not always easy. If it was easy, everybody would do it, right? But I think that would be the strategy that I would employ. But I think you're definitely in a better shape to get purchased, if that's the goal, if you're building for a real market, a product that has demand, and you're doing it in a way that makes a whole slew of customers happy, right? So if you focus on the customers, you focus on your business less so than the end goal, I think good things normally happen.
Awesome. And so, kind of moving past IBM, I mean, now you're out of the mergers and acquisitions role. You're doing business. I forgot the title.
Yeah. So IBM is structured into segments or divisions. Every division has it's like a little company within IBM, and so I have a division now, a segment.
Okay, awesome. But so moving out of that too, you're also kind of coming back to the startup, you know, your startup roots. I heard you say that you were.
Well, I don't know about that.
but you're working with a few startups. You know.
For me personally,
for you personally.
Yes.
Sorry,
I thought you were
no.
talking in my role.
No.
The division and our segment, I mean, it's probably about 500 million, so it's not really startup. So that's why I lost you on that. But I think, you know, part of what I'm looking to do personally, if that's what you're asking, is what we started the conversation with. I think that there's a lot of cool technology and cool ideas and strong people in Ottawa, and I think that in some ways I've felt a cooling off in the tech sector over the years. It doesn't seem in some ways as vibrant as it was many years ago. When I mean that, I don't mean at the grassroots level. I mean the successes of the Shopifys or the companies that are going from idea to a 50, 100 million, a 200 million, a 500 million dollar company, and truly being a big company in the space, right? And I think there's potential for that, and I just think part of that is what we talked about earlier in the chat, is that I think if we can surround some of our entrepreneurs with more help and assistance and advice and guidance, I think that those ideas and roots can take off, right? And I guess that's, for me, doing a lot more of that now, working with smaller startups, advisory boards of directors, those types of things to help advise and guide.
And so personally, you know, what do you look for in an idea? Like what constitutes a good idea in your opinion, with your experience and your background?
Yeah, well, I think risk of being repetitive, the stuff we talked about, you know, is it an addressable market? Is it a real market? Is there demand in it? And then secondary, do you have an actual technology idea that's going to fit it, right? I don't typically get involved in too many, and it's the same as acquiring, right? Where I would probably choose to myself spend my time is where I would choose to acquire. You know, sometimes I talk to some folks and they have a really cool technology, but most of the conversation is around the technology, right? It's around, it's got this bell and this whistle and it's developed this language and it's, and I come from a technical background, but it doesn't really inspire me because frankly, it may not be saleable, right? When you start asking questions like, well, who would buy it? Well, you kind of get blank, right? Oh, I don't know, but isn't it cool? Well, yeah, it is, but it's, you know, so I'm much more driven by the concept that has roots in again, an addressable market.
And is there a particular kind of field or technology or industry that you feel is about to kind of just skyrocket?
Well, I don't know if I'm qualified to comment on it. I mean, I'm a tech guy by trade, software mostly, right? So I don't follow all industries, so I don't necessarily know where life science is going to go or where those industries are going to go. But I think that there's a lot of things going on right now in tech that are causing a lot of different change in software, right? And probably a lot of people in this room are probably capitalizing on that. But you know, if you think about the big changes at this moment in time, there's mobility. Everything is mobile apps, mobile this, and it's not just mobility in terms of having an app on a phone, but it's tying mobility to enterprise software. It's huge, right? How do you get all of these things that are run businesses today, small businesses, large businesses, how do you get them mobile? Because more and more now, people don't want to be strapped to their desk and have their laptop to tie to a corporate network or a corporate application or a corporate whatever it is. So mobility is huge. Cloud is huge. I mean, I think more and more, any business that's not thinking about offering their, again, I'm thinking software, because it's where I live my life. You know, everybody is thinking cloud. The buying ramp up now and the sales cycles of software now. If you don't have a cloud presence, many times you're not even in the game. I think that there's just too many times now where people don't want to deal with their IT department. Unfortunately, times have been tough. The IT department has scaled back. People want to make business decisions and get business software and processes up and running, and they just don't have time to say, well, IT's got no qualified people. There's a skills gap. There's an education gap. So I think cloud in general is having a tremendous effect, and it'll continue to grow. Which is funny because back in Corel we talked about network computing back in it was the early cloud. I can't remember what the heck it was called back then. Michael Copeland even spun out a startup, if anyone remembers the name, around this. Zim? Yeah, I think it was Zim. Are they still alive?
Yep.
Oh, they're doing well? I don't know. No? Okay. Okay. I haven't followed them, but it reminded me, at least back then, the concept was an early day cloud computing. I guess it was just maybe a bit before its time. I think social collaboration is driving a huge opportunity. You know, I'm an old man, frankly, in this space. A lot of people before me, the Generation Ys, who doesn't use Facebook and Twitter and, you know, collaborate on everything? And so software coming up nowadays, the opportunity to get people working together in a way that's more effective than the next guy, and doing that in the cloud, doing that mobile, doing that, I'm seeing tremendous opportunity that brings those three together. I guess finally the last one I'd say in software is but again, this may be biased to my space, is big data and analytics. You know, companies more and more, they've always had this challenge, but everything nowadays is metered and censored and governed, and think about what's going online now. How many people are tweeting and Facebooking and this and that, and trying to keep up to your customers. Simple things like, you know, a Canadian Tire trying to go out online and decide how many people are talking bad about me, right? How do I know that I'm being slammed on Facebook and there's an anti-Canadian Tire Facebook page up, and all this data that never existed before, and ways to make that relevant to businesses so that they can actually compete, I think is another big emerging space.
And again, coming back to you personally, what's the biggest lesson you've learned from one of the, you know, what was one of the toughest challenges that you faced over your career, whether it's in a startup, whether it was with IBM, that you learned the biggest lesson from?
Wow.
It's another big one.
Yeah, it's another big one. I don't know if there's only one thing. I think, again, I think my view is the biggest lesson, if anything, is that embracing change always works out. I mean, I think that if I look at whether it's an entrepreneur, whether it's a big company, whether it's, you know, we're all typically afraid of change. And I think the markets change, companies change, technology changes. And I think that those people that can ride the change and be flexible and not be afraid of change and embrace it in many ways, try and keep their eyes open and watch it coming and find ways to adapt to it, have always landed on their feet. And I think that's probably one of the biggest lessons I've learned is not to be afraid of it, but to really seek it out and help it help you. And I think when you ride change, it usually has good outcomes. And I find that most times people dig their heels in, whether it's technologically, whether it's work-wise, whether it's trends. It usually doesn't work so well for them. So that'd probably be one of the biggest things that I've always found.
And so earlier you mentioned that you've always kind of been drawn towards bigger companies.
Acquired by them anyway.
Or acquired by them,
drawn.
sorry.
Maybe I'm like a moth to a light. I don't know. Yeah.
But if you were to start over, would you do anything differently? Would you would you, instead of doing B2B, would you do B2C, or
No, honestly, I don't think I would. I'm a big fan of B2B personally. It's just I find the business sales are just sometimes easier. The consumer space is hard. It's a great space and you can make a lot of money. And look what Apple does, right? As an example, of course, but they're a huge company. But it's hard. It's fickle and it changes fast. And I've always found that it's just a little bit more soothing to be in a market that's not as volatile. And in many ways, for me, I found the business market just a little less volatile. So I don't know. I'd change that focus.
And do you have any big plans for the next 10 years? What are you going to be doing,
Well,
if you're allowed to say?
To be on a boat, I would wish. Maybe golfing and all the stuff we'd all like to do. I'd love to retire, but I don't know if that's going to be possible. I think if I were to look at the next 10 years, it'll be a little bit of the same, but I'd like to do, I think, a lot more with the entrepreneurs of Ottawa and the community, and I haven't really done a lot of that in the past, and started to do a little bit more lately. And I'd probably say be more engaged in the local community. Most of the companies I'm with in IBM were very international, and I do a lot of work outside of Ottawa, frankly, not a lot inside Ottawa. And I find in some ways it detaches me a bit from the local business community. And I think if I were to look 10 years ahead, I'd like to be a little bit more connected to the local business community.
Cool. Just a final question before we flip it over to these guys, who I'm sure have lots of stuff to say. Are you reading anything super interesting right now that we should know about?
Nothing.
Nothing. Wicked. In summer mode already.
No. Well, you know what? I used to, when I was younger, I used to read every book I could get a handle on that was something that was informative, right? Whether it was a business book, early days, how to program Visual Basic, for God's sakes. That was my bedtime reading, right? I got to learn all about Java now, and I'd read the hell out of that. Now it's it's mostly stuff to detach from that. What piece of fluff can I find that's not having me think about technology or work or addressable market?
That's good. That's good.
And nothing I could probably comment on live.
Okay. That's fine. That's fine. Do you guys have any questions for Dan? Yeah, here. Let's start up front. Go ahead.
My focus, H2O is an art couchman, H2O boy. My focus, my business is marketing. Now, you mentioned that you were particularly focused in your space. Would it be wise for, say, if I'm focusing on marketing, to acquire, let's say, a company like Fresh Men's Salon that's got a large customer base and is in a different space? Would it be wise to go after small acquisitions like that? Or should I just focus on my space?
Well, I think it's a hard question to answer, of course, not knowing your business inside and out, but I think I would probably generalize it to say that if you think that there's synergies in going after a secondary space and you can manage that in a way that doesn't conflict with your primary space, then I think it's always an opportunity. I think that in any acquisition, as many of you probably know, less than 30% of companies get the outcome they desire because they either don't execute it well or they strategically go in with the wrong reason to get it, right? And so I think that, if everybody did fewer things better, they would probably be more successful, right? And so I think if you can go into an acquisition, like you're talking about, in an adjacent space, it's not yours, right? And it's not going to distract you from your core business, and it's something you think you can make money at, it sounds like a win.
But if, for instance, because you mentioned only a certain amount of companies succeed, so I guess the bottom line is I have to go after certain more companies.
No, I think it's the discipline in M&A, frankly. I mean, it's how you go about acquiring. What many people do when they buy a company is they don't really think through the goals first, or they have too lofty of goals in their business plan, or they don't actually put the executional heft behind actually making it work. You know, we've done a lot of work at IBM as an example. We're way above the norm in our success rate of our acquisitions. But I think it's a fine line when you acquire a company from integrating them so quickly that you snuff out the special sauce. You know, you're buying somebody because they have something magical, right? And you don't want to lose that magic. And I call that losing the special sauce, right? What made them successful in the first place? Something. They wouldn't have achieved 20, 30, 40, 50, 60 million revenue if they didn't do something right, right? So it's easy to take that company and go, we're a bigger company or your company, and wham, you're now part of us and you're going to do it this way and this is it and that's the end of it, right? And that's a real danger that people do in acquisitions. It's quite common. There's the other side of the spectrum that says you never integrate. You just continue to let them do their own thing and they do it how they want and as they want, and that goes on ad nauseum forever. And that's okay if there's no synergies between your companies. Because if there's synergies between your companies and you cannot bring those synergies together, which means some form of integration, then you're really not going to achieve your business case, right? So I think it's really thinking through the synergies between your companies. Are you going to achieve them? Are your business case and what you want to achieve, is it trustworthy? Has it got some fact, right? And then is your integration approach going to be done in a way, in a rate and pace that will actually allow you to achieve that? And if it's synergies involved where they have something that can add to yours and you got to put two things together, you do need some form of integration. And you got to do that well. Because if you don't, you lose all the talent.
Awesome. You had, yeah, go for it.
So Dan, would you mind elaborating on which companies IBM has bought in the past, and what sort of market IBM looks for? Is it analytics, big data, or just beyond that?
Sure.
Question?
Yeah. Well, I'm obviously most familiar with my space. Again, IBM's big, right? It's 120 billion. Software is 50-some billion. We have different divisions. I can tell you our main acquirers are in those divisions. I'm in a division called Business Analytics, which of course is around analytics and data and so forth. We have another division, a security division, that specializes just on security products. Both of those have been very hot, but we've bought mostly, where I am, of course, analytic-driven companies that are doing performance management analytics in a given space. So marketing performance management, sales performance management, financial performance management. So anything along those lines that is analytical in nature but around performance management, where I am. Of course, security is buying different. They're buying security-based companies, which I'm not really privy. I don't follow all the buys they do and why. So it's hard to comment on an IBM global scale. So the deals that I was doing were in my piece of software, not all of the ones across the I think there's 20 divisions or something like that.
So are there any names that you're allowed to divulge?
Oh, sure, they're all public. Yeah, we bought companies like Unica, Coremetric, Sterling Commerce, SPSS, statistics-based company that does predictive analytics, Clarity Systems out of Toronto, Algorithmics. Algorithmics out of Toronto, so Algorithmics does financial risk management. I remember doing the diligence on them and frankly not understanding a word they said. It's an interesting company. It's a bunch of PhDs really that ran it, and they were obviously big in demand in 2008, the financial crisis, but they do things like bank liquidity and capital risk and hedge fund. I can't even think of the names. I mean, they throw out the terms that it's all done with standard deviations and quantum physics or some stuff. I don't know. It's a very, very interesting space. Remember my first meeting of them in diligence, just nodding and smiling.
That's the magic.
That's the magic. What you guys do, keep doing that.
I think you had one.
It's working. Yeah.
Go for it. Okay.
So you mentioned the addressable market quite a few times. In the software space, how do you find the most successful startups that at least you came across in their customer development model? Because when you talk about fulfilling a need, in most cases, it's being fulfilled at one point or another, especially with software. So how do you find the less targeted or less, unfulfilled needs in the software space?
Yeah, well, that's the secret sauce, isn't it? I mean, that's what I was saying. It's easy to, if you remember what I said earlier, if you're going to make a successful startup, you want to find the addressable market that's unfulfilled and go after it. if I had the formula for that, I'd be a multi-billionaire because I'd repeat it over and over and over and never tell you about it because it would make me a fortune. It's not easy. I think most of the time I've just seen it just comes from people's day-to-day experience. I don't think anyone, and no one I've met and acquired, sat down one day and just pontificated on, okay, I'm going to start something. What is it that I am going to start? And then they went out and did a bunch of research and picked an idea and things like that. More often than not, they fell into it, right? Through their own personal experiences. I'm at work one day and I'm doing some stuff and I just realized that the stuff I'm doing is just very inefficient. And why do I have to do it this way? And then they ask their friend at the next company, do you do this? Yeah, how do you do it? Oh, it's awful, right? And it comes to them that, well, why do we do stuff this way? All right? And I find most people have it from an experience they've had where they look at it and go, I'm encountering something in my day-to-day life that is just not so good. It could be done better. My example was the insurance industry, right? I didn't find that addressable market. Brent, who was my partner in that, he was in the insurance industry and he was just scratching his head going, this is awful. It's awful, right? And then decided to do something about it. That's the next step, right? A lot of us encounter stuff every day that's awful in our day-to-day lives, and there might be a business idea in there might be a startup idea, but many times we don't actually do anything about it, right? I think that's where it comes from. Does that kind of answer your question? I think it's hard to just pick, like, this is how you find it.
Go for it.
Dan, if you had to give advice to entrepreneurs who wants to build and consolidate through acquisition rather than dream of being acquired by a bigger company, what advice would you give?
To consolidate to a position?
Yeah, you want entrepreneurs that desire building bigger things instead of just build to sell as we tend to do in Canada. What would be your advice?
Well, of course, you have only a couple ways to grow, right? No magic in that. I'm probably not telling you that you don't. If you're building it to be big yourself, you're either going to do it through addressing new markets and broader markets, going global, those types of things. You're not going to do it by just selling in Canada. And then you're either going to do it through a bunch of innovation internally, organically, or you're going to do your own acquisitions of other companies and consolidate, right? And so I don't know there's any magic
What
there.
are key ingredients?
Key ingredients to be successful in that?
That you would need to have if the company decides that they want to build instead. They want to discover market and so on. But what are the key components that they have, the building blocks, or the key components they have to have inside their walls to make sure that they're actually can sustain some growth?
Yeah, well, I think that comes down to what we were talking about earlier. That's the leadership of the talent that you're bringing in. Because growing a company in the different phases you're going to go through to do what you're suggesting, you're going to need maybe somebody different at every step. And I think that comes down to the leadership of the company being self-aware enough to know when they're in trouble and to know their blind spots. That would probably be my biggest thing I would say that you'd need to be successful, right? There's so many times founders, you think small company versus a $100 million company, and then you get to 100 million, and is the founder still the right person to run the $500 million company, right? And do they have the self-awareness to, one, know they're not, and the humbleness to actually step out of it, right? Both of those are now that doesn't apply to everybody. I mean, there are the odd Bill Gates of the world that have an idea and take it to a $50 billion company and still stay at the helm. It's individualistic, right? But I think that's the self-awareness. He obviously felt he could take it through all the levels and get to that level and still be at the helm, and he did it, right? There's some people I think that try that and they can't, right? And it impairs the business. And so I think that's self-awareness, and then surrounding yourself with the right expertise, right? I think if you have that direction of people around you that are not group thinking but truly challenge you, especially in advisory positions and an activist board that's not just stamping stuff and saying, yeah, it looks good, great, you guys are the best. I think that helps too, keeps you sharp.
Go ahead. Yeah.
You mentioned two big areas these days, cloud and data. Where do you think companies are on the continuum in terms of actually trusting the cloud with things like their intellectual property? We talked about security and that kind of thing. I've seen companies that go out, they have a cloud offering, but they also have something that you can deploy inside your firewall.
Yeah.
Just wondering if you've got a sort of a feeling as to where people are. Like, everybody's talking about the cloud, and then you get, Heartbleed and this sort of stuff.
Sure.
At what point do you actually give yourself up to it and trust it? Just curious what your feelings are.
Yeah, I think it's moving faster than we think. And I think that in many cases when you get into, which this is not uncommon in any cloud sales cycle, right? Sooner or later comes up, what are you going to do with my data? Is it secure? Are you going to get hacked? All those kinds of things. And more often than not, it's not necessarily, and this is a real balance, and it depends again the size of your company too, right? Most times they're sometimes worried about the data, sometimes they're just worried about the liability. So sometimes you actually need to secure their data, sometimes you just have to take on liability. And so you do have to get around that conversation. And I think that most times it's always a question, but the answer will depend on which company you are. So, you know, as an example, as an IBM, right, we're a big company, lots of money in the bank, a lot of revenue. If a company says to us, well, we're worried our data is going to get hacked, and if someone takes it, we're going to get sued for $10 million, right? That's the company's concern. Well, I could say back, because of the size, I will indemnify you against that $10 million. You get sued, I'll pay it.
So in
Deal
the
done,
case-
right?
In the case of a small startup that wants to use a cloud-based model, you would actually say you would want to partner with somebody like an Amazon or Google or whoever who has the infrastructure in place to
Yep,
protect
all of
your
us big
cloud.
providers do. IBM has it, Azure has it through Microsoft, Amazon has it. But they have that, you know, rather than you go and making your own data rack somewhere, that would probably not be your best interest. But I also think you're selling your software at that point in a different way. To your point, you're going to have a much more technical sell as a smaller company, because those security questions, you're going to have to demonstrate the measures you have in place. Not that bigger companies like IBM don't have to, we do too. We have to be rock solid. We're not looking to pay $10 million, right? We have to put in all the measures and prove the measures and document the measures that we're going to keep the data and the privacy and the everything secure, right? But you probably have a bit more of that in a smaller company, because you're probably not as trustworthy. The customer's going to wonder, are you just going to fold and run?
Yeah. well,
Right,
As
that's-
as long as you stand on the shoulders of giants, you're
Yeah.
probably.
That helps, for sure. In the cloud space, it helps. And that's why you see these data centers like IBM's data center and Azure and so forth popping up.
First one, yeah.
Dan,
Jason. and then-
With those acquisitions of the data centers, and is there a move from the enterprise history of IBM into more SaaS models and recurring revenue subscriptions of all the software delivery?
Absolutely. I don't know if it's an enterprise statement, but it's a delivery statement for sure.
Yeah.
I mean, IBM is undergoing a major transformation between on-premise world
Yeah.
and the SaaS world, and then bridging the gap between the two. And so I would probably say that any new offering coming out is led with mobile cloud first. If it's not mobile cloud first, it's not going to market, any new offering. The challenge in IBM, of course, big company, is that we talked a little bit earlier, we're not a startup, right? We've got thousands of customers we got to bring with us that all have on-premise deployments. We have to manage that transition to, do they want to go cloud? When do they want to go cloud? How does that all work together to bring them there, right? But for new sales, it's obviously an easier pitch. But absolutely, the mentality is mobile first, cloud first on everything we make now. The ones that I'm more partial to are either an entire company acquisition, which is you're buying everything, right? And you're buying that for a reason, which is the customer base and the sales and the technology, and you're bringing the whole company in, which is very different than maybe a technology acquisition, where, you know, we have bought several companies in the past that either are zero revenue or borderline. They have, you know, $100,000, $800,000. It's revenue, it's good revenue, but it's not big. But it fills a technological gap in the portfolio, right? And if you're positioned where you fill a technological gap, and again, there is an addressable market, just because you haven't developed that market yet doesn't mean you're not attractive.
And I think the last one was right there.
My question is just, because we are a group of students, Ottawa University students, we are four actually, and we're working on application. We have already built the Android application, but we have a problem with the for iPhone, and we are looking for someone to help us build the app for
Okay.
iPhone, but like we can't find the right guy to join our team.
Okay.
It's been a month that I've been talking to many people, and the first question that I face from those people is that how much you gonna pay me? We don't have the payroll system yet. We don't pay anyone. So how can I solve this problem?
Yeah, well, it's a
So we can chat about it too if you have time afterwards. I can share some ideas and resources, but I'll let Dan
Yeah,
for sure
I-
from a bigger level.
I'll write him a check.
Yeah, I'll write him a check.
Handing out checks at Fat Boys. Well, it's a classic business problem, right? You're not alone. I mean, everybody in this room faces the problem on how do you grow and do that in a way that you get the right talent on board, right? And you only have a couple ways. You either find people that are willing to do it for free, same as the advisory board conversation, because they're enthusiastic about it, which you could find as rare, right? That no one's going to want to do that. Or you're going to have to find a way to get up investment to pay for what you think is a good business idea. And that means you're going to have to go to a bank, your dad, your mom, your uncle, you know, an angel investor, wherever you can cobble together $100 grand. And if you think the business has legs, then that's showing your skin in the game, right? You do pay for it. Because if you believe it's worth doing and you believe that you're going to make money on it, then you sometimes have to invest. It's not going to come for free. The third way, of course, which is quite common, it's less attractive nowadays than it used to be, I think, is the equity model, where you say, come and do this, and I'm going to give you shares in this company I've created, which at the moment in time is probably worth nothing, but if the person's a believer, can become worth something, right? And of course, back in the early 2000s, that was one of the most common models when Pets.com was out there, right? And everybody was getting equity, and everybody was making millions of dollars on equity for companies that really had no value. I think since the bust, people are a lot more cautious about working for equity, because the belief that they're going to turn that equity into something that's actually liquid and valuable at any moment in time, I think there's a lot more skepticism about that. So it's a bit of a harder sell for an employee, for an investor, for someone else. Well, maybe not an investor because that's what they're in it for, but so those are really your three options, right? Begging, borrowing.
I'm going to add a fourth option. There's all kinds of startup things. So Catherine here in the corner runs Startup Garage here at Ottawa U. So you guys should connect. There might be a fit there. There's startup weekends in the city all the time. There's a bunch of different avenues to getting money, finding other people to help you out. You know, the engineering faculty's down the street too. I mean, you just walk into the computer sciences and say, hey, who can code? And you strike up a conversation. And there are government programs, IRAP, all those things.
So that's the finding people that are doing it for enthusiasm, and the government programs might be some funding, right? Different. It might be your great uncle.
I have a government program. I'll give you my credit.
There you go. Boom. All right. So we're going to wrap up the questions. Let's give Dan a big hand of applause for coming out tonight. I just got a few quick announcements. Just I got it all written down here. So first of all, I'd like to thank Stephen Days and Catherine, obviously from Startup Garage, for the space, the venue tonight. Ottawa U. Thanks to Lindsay for registration, tweeting. There she is. Thanks to Robert, for recording. And then announcements. So some of you guys might be interested in this in terms of finding other people. So the next Startup Weekend Ottawa is actually June 6th. There's still some space. It's at Shopify, so ottawastartupweekend.org. You can sign up, so whether you just list your skill, you find other people, you guys can work on ideas. The next Startup Run in Ottawa is May 29th with April Dunford. She's she's on her 6th startup. 4 of them have been acquired. She's worked with companies like IBM, Quest Software, and stuff like that, so maybe you guys cross paths. That one is happening May 29th at Microsoft, so it's up on the site if you guys want to come out. 2 more things I want to mention real quick. The Hustle Shuttle, if you guys have heard of that, to Montreal, the Startup Fest is happening again this year. So Startup Fest is a startup conference, 3 days, Montreal, July 9th to whatever 3 days later is, the 12th. You can sign up for that on Invest Ottawa's website. The other thing that I want to mention is there's a crazy 10-day hackathon coming to Ottawa, location yet to be determined. This company in Toronto, My Planet Digital, it's a JavaScript and Drupal 10-day hackathon, May 5th to 14th. You can get more information at myplanet.io. And then again, Franco at Startup Grind, if you have any questions. All right, thanks for coming out, guys.
Did you do it fully fleeced with all those questions?